Good afternoon, friends. Today we are taking the session, and this is a special concern session for the mock test of the paper Strategic Financial Management, new and old scheme both. So I, CA Ashish Gupta, Deputy Director, Board of Studies, will mentor the session. Student, I will request you, please send your queries online, and so that I can reply the same. Though I will start with the each question of the mock test separately, and please remember my approach is like that because since this most of the topics of this new and old scheme are common, so you will see at every place, at every slide, I have marked the relevant question number as well as respective question numbers in new as well as in old scheme. Though I have taken the basis of new scheme, but I will cover all the questions of the old scheme also. Now this is there is one query of students are received. No problem. I will take up one by one query. So friends, let us start the session. Now friends, if I talk about the paper structure of the question paper, since it is almost only say about 1 month has been left for your examination, so you should be very well versed with the what is exactly the structure of the question paper. Now so far as the question paper structure is concerned, please note the question paper is consist of a basically new scheme. If I talk about there are overall 6 questions there, out of which first question is compulsory, which everyone has to attempt. Then it is of carrying 20 marks. Then out of remaining 5 questions, a candidate is required to attempt 4 questions, which are of for 20 marks each. So by this combining this, it comes 100 marks. Now I talk about the structure of the question paper of old scheme. Now so far as the structure of the old scheme is concerned, it is bit different from the new scheme in the sense that first question is same, compulsory of 20 marks. However, in the old scheme, there are 6 questions are there, out of which you have to attempt 5 questions which are of 16 marks each. Now in that case, what happens? And especially in the old scheme and new scheme, there is one major difference. In an old scheme, there was a theoretical question in the end of a short note. Normally, it has been observed that students skip this question or in the choice. However, in the new scheme, theory is attached with every question. So let us start with the first question of the new scheme, and 5B it is in the old scheme. Now the question is basically on a swap arrangement. Now student, you will see the question of a similar type is in the practice manual of the old scheme. So but this question has been slightly modified, keeping in view to test the conceptual clarity of the students. Just now I have received one query. I have received just 2 more queries now, but don't worry student, I will take up one by one. Now there is one student is saying solution is not clear, 1A. So student, please see, let us discuss the solution. Now in this question, see beta, basically it is swap arrangement, and in swap arrangement, because very frankly speaking, what is the scheme of swap arrangement? There is no change of exchange of principal. That is totally based on the swap notional amount. Only the exchange of final settlement takes place. So it says the derivative bank entered in a swap arrangement on a notional principal of rupees 10 crores and agreed to receive MIBOR overnight floating rate. It means it is receiving, but however it pay at a fixed payment. Okay. The swap was entered into the on 19th August 2019 and was to commence from the 20th August 2019 and to run for a period of 7 days. Now these are rates have been given to you, different rates. Basically these are MIBOR. Now it says if fixed rate interest is 8%, then evaluate the nature of the swap arrangement, the net settlement amount. Now student, in the practice manual a similar question is there, but there you have to calculate the fixed rate of amount. There the net settlement amount has been given, but here this question has been reversed. Okay. So let us see the solution. Now these are notes. Sunday is a holiday. Working in the rounded off to be rupees and avoid decimal working and consider 365 days. Now student, please note, whenever any such kind of conditions has been given, please note these has to be followed religiously in the examination. Because what happens, it has been observed that normally student ignores these kind of instructions and that's why they lose the marks. Now let us see the solution. First of all, first part, the given swap arrangement is a plain vanilla overnight index swap. Now how plain vanilla? Now let us see if you are clear about what is the exact nature, what is you can say what are the various type of swaps. So here we are testing what is the knowledge of a student. Now here the students here, it is the exchange of floating versus fixed. Now when there is exchange of fixed versus floating, it is a plain vanilla swap. However, we can say there are basis swap where the basis of a floating rate can be different, but here the fixed is exchanging with the floating. So that's why it is called plain vanilla swap. Since this swap is relating to our MIBOR. MIBOR means Mumbai Interbank Offered Rate. Mumbai Interbank Offered Rate, and that is on the overnight basis, because it has been clear mentioned that it is overnight rate. So it is overnight index swap. Okay. So now first part is clear. Now I am coming to second. Student, I am receiving your queries, but don't worry, I will take them. How to study SFM paper and how to approach theory in this exam. I will cover every point. Don't worry, I will take each and every point. Now see, when you take the solution, so first of all, since it is a 7th-day contract, so it will include it will be, run on the accumulation basis. First, we take the principal amount, then we take the interest. Now this interest will be on the 1 day. Now this will be amount added here to take the accumulation effect. After that, we shall calculate it for the second day. Then this will be the interest. Then it will be added. Then we will calculate MIBOR. Seeing that, you can see we shall continue. But however, it is very important since Sunday is a holiday. So we cannot have a separate rate calculation for the Sunday. What we will do, we shall calculate the interest. Here we have added, but here we shall calculate the interest for the 2 days. But not because rate is there is no rate of the for say here the rate is no rate for the Sunday, it is a Saturday. Now on the Monday we shall apply this rate and this amount will come. So accordingly the total floating rate of interest will be, as per the floating rate will be now I am coming to fixed interest rate. How we have calculated fixed interest rate? Simply the rate of interest is 8%. So we shall have calculated the 8% at this amount. So ultimately the net settlement amount comes here. This. So I hope this question must be clear to the student. Now I am coming to the next question. That is question on the portfolio management, or we can say sometime it can also be categorized in the mutual fund, because this question involves calculation. We can say it is a kind of a portfolio evaluation question where we have to calculate the what is the performance of a fund. See, in this question it is the beauty of this method. Now in the examination, sometimes instead of portfolio, if mutual fund has been used, so then what happens, the word it covers here mutual fund, it is a mutual fund. So sometimes it has been seen that this type of questions are covered both in mutual fund as well as in portfolio management. Now here in this question we have to calculate two ratios, Tarpe method and Trainer ratios. and assuming we have been given the rate of, so it's a very simple question, and we have to calculate the required to evaluate the reward to volatility. Now volatility can be defined in two terms. Basically volatility relates to the standard deviation. Now when we bifurcate the volatility into two parts, one is our systematic and unsystematic, so then it is a different. For systematic we use the beta. Now when we talk about the Sharpe ratio, so this formula is basically simple volatility. However, Trainer ratio is we are using beta. Now what we have done, first of all, we shall calculate, mistakenly I have mentioned here is mutual fund. Please note it is basically a portfolio. RP minus RF 15, 18, 14, 12, 6%, 6%, 6%. RF, RP minus RF. Now here I will use the volatility, and volatility is indicated by the standard deviation. So we shall calculate according to the same, and we shall accordingly categorize the same. Okay, I hope it is must be clear to you. 1 minute. Okay, now ranking has been given, so we can see the value which is the highest. It will be given the first ranking, then second, then third, then fourth, and then fifth. Now I am coming to next. Now here we shall use a Trainer ratio, and for Trainer ratio we shall use the beta, that is an indicator of the, you can say it is a kind of a systematic risk. So sometimes it is also called the reward to variability also, it can also be, okay. So here we shall see the same RP minus RF 12, 8, 6, then we shall use the beta, then we shall categorize it this. So this way 1, 2, 3, 4 and 5. Now we are coming to the question number 3. So not question number 3, is a question number 1C in a new scheme, and it is in the form of old short note in the old scheme. Now here we shall discuss what are the various problems faced in the international budgeting analysis. Now there is one student saying how to study for theory in SFM paper and how to approach it theory in exam. Now friends, please note, please go through the study material thoroughly. So far as the nature of question is concerned, if you are in a old scheme, then you can refer. So I think you have to be extra conscious, and it will be better if you prepare some small notes and bullet points for your examination prepare. Now question comes, how we attempt the theory in the examination. Now I have observed that even some students have asked me, sir, do we need to write a long answers, because you will see there is a lot of stuff here in the provided answer. But my suggestion to you, please student, please note, you not to thoroughly say, you can say that you not to fill up too many sheets in the examination. Rather you should try to cover the bullet points as well as your key points. Now here you see multinational companies investing elsewhere in the, now you see what is exactly here. The key point is basically the foreign exchange rate risk. Okay, next is due to restriction imposed on the transfer of profit. This is your next. So basically they are normally, it is called block fund. So these are some keywords. It should be reflected in your answer. Now, similarly, in multinational capital budgeting, after tax cash flow need to be considered for project evaluation. The presence of tax to tax regime and with other factors such as remittance for the to the parent firm from the royalty dividend extra provision withheld in presence of tax treaties. So it means it is clear to you there is some tax issues. So all these say key points should be reflected in your answer. Now this is a question number 2A, that is same 2A in the old as well as in new scheme. Now here this is a question on the nostro and vostro account. Now friends, in this question normally student face a lot of problem. In spite of fact that a very good explanation has been inserted in the study material. Now you question is before your screen. Just read the question, then I will discuss with you. Now student, always remember that there are two positions. One is in the bank account, that is called nostro account, and another is, you can say, this kind of a position in the books. So these are book position in the books means it includes your opening balance position overboard, means it includes your forward and as well as your current account. Current account means that takes place simultaneously. Like say in the case of a telegraphic TT transfer, the wording will be used here TT. TT means telegraphic transfer. Now what is telegraphic transfer? Basically, though it is a name is telegraphic transfer, and now the I think telegraph is no more in, especially in India if I talk about. But it is used to be earlier, a term is used to be in a traditional way, like that earlier there used to be telegraphic message from remitter from one bank to another. So basically this is, in this case what happens, your transfer of funds takes place immediately. So here the entry will come on the both in your books as well as your in your bank account. However, if you enter into any say forward transaction, in that case what happens, yeah, your entry will come only in the your books, that is, but not in your bank account. So let us see the question. You have been given the opening balance overboard, and so see here we have been given, see, two position. One is overboard, here it is in our account. So it means credit means the bank has a fund their account. So it can also be the debit. Debit means overdraft. Please remember, okay, it is very important. Now in the exam, if nothing has been mentioned, so it is always better you please take it as a credit. Now overboard 1 lakh, opening balance credit 2 lakh. Now let us see one by one entry. Bill on London. Okay, bill on London. Now it has purchased a bill on London. So now there will be addition in the books of the party, but however there will no transaction take place in the books of cash position will take on. Now here, now we are coming to the next forward sale. Okay, forward sale, see, it says forward sale sold forward TT means your sale will take place in a future. So here we shall make a sale 120. There will be no entry here. Similarly, cancellation of a forward contract. Now this contract, see, here the forward purchase contract has been cancelled. Now forward purchase contract means cancel. See, bank has must have been entered into a any dealing of a purchasing, but now it has to be reversed. So it has been shown in the cancellation. Remitted by TT. So now you will please note this entry will take place at both places, this place as well as this place. Okay, so we shall come to the know the now there is one more entry, draft on London cancel. Draft on London cancel means when the bank has issued the draft, then bank has shown this 60,000 amount in the you can say it has shown in the their sale book, but now this has to be reversed, so we show it as a purchase. So overall the closing balance oversold comes 10,000. Now similarly we have a closing balance credit 50,000. Now what happens, it says you have to meet some condition. You are required to maintain a credit balance of GBP 65,000 in nostro, then keep as a oversold position this. Okay, now see, let us see student, here the closing balance is 50,000. Now we have a 65,000 here, so we need 65,000. So what we do, we shall purchase 15,000 GBP. Now we shall purchase 15,000 GBP, Great Britain pound, so it will bring up our value to the 65,000. Okay, but here it will also come our value is the closing balance oversold. So our it will bring up, or we can say it will bring down our value. The bring will make will oversold will be converted into the overbought by 5,000. But you have to say you have to create a 20,000 oversold position. So you will sell 25,000 GBP. Okay, I hope the question will be clear to you because normally students are facing this problem. Now this question is to be in the new scheme. This question is basically related to the stock market valuation, or you can say not stock market valuation, it is basically related to your security valuation. So normally student does not face any problem in this answer, since this answer question is from the practice manual. So this question has gone very well. Now I am coming to the question number 2nd C, new scheme, and a 7B of the old scheme, where the question has been asked. Sustainable growth is important to enterprise long-term development. Explain this statement in context of planning healthy corporate growth. Now student, this question is basically theoretical nature, but my advice to you, please remember, sometime I have observed that students skip the theory saying that yeah, I will make it at my own in the examination. But please see, theory is very essential for your two purposes. First of all, it gives you the conceptual clarity. Second, sometimes what happens, especially in the old scheme examination, no choices are left with them for a numerical question. So in that case, the one question is left with them which they can attempt in a proper manner. So my advice to you, please don't skip the theory. Now I am coming to see solution. If I talk about the solution, so basically the solution has been given first para, then two para. Now here, please note, now these are your key portion. These are your key points. So please remember this, you have to cover these key points in the examination to fetch the good marks. Okay, there are another key point should be the financial leverage ratio. So these are some things, because sustainable growth rate basically relating to your leverage. So sometimes these are some things that you should keep in mind in the examination. Okay. Now I am coming to the next question. This is question number 3A. it is same in the old and new. So basically this question is relating to your merger and acquisition, and this is a very celebrated question. So I have observed that the student does not face any problem. Okay. This question involves simply calculation of EPS and exchange ratio calculation. So not a problem has been faced by any. Now we are coming to the question number 3B, new and old scheme. Now student, if you talk me about me this question, it is my one of the favorite question. I think this question might have come in say around in May 18 or somewhere in an old scheme question paper. I don't exactly remember, but it is one of my favorite question. Why? Because it is a unique question. Unique question in the sense that earlier there was a one question where the question requires you have to calculate the effective yield. Okay, and you have been given the number of days. But you have been given number of days. Okay, but now what happened this time, the paper setter, what he has done, he has given you to the effective yield per annum, but you have to calculate the number of days. So this way he has tested the knowledge of the student. So student, please remember, in examination it is a paper setter's choice. It is the area of his domain or is a freedom, because he can set the question in any within the preview of the syllabus. So this was one of my favorite question. So your conceptual clarity should be very good in this manner. Okay. Now here we have first calculate the units, then we have come to NAV, then we have to calculate the total yield, then number of days. So simple, it was a very simple. Now we are coming to the theoretical question 3C. It is not in your old scheme, it is in the new scheme. So various allocation strategies has been covered here. These are your portfolio related strategies. Okay. Now it is one of the most celebrated question. This is question number 4A, new and old scheme. Please read the question. If I talk about this question, so basically this question is, you can say it is covered in your Indian Capital Market chapter number 5 in old scheme, and in new scheme it is covered in the chapter number 10. Not chapter number 12, it is covered in the chapter number 8, derivatives. So here the Ram is a person who is using you can say nifty futures for hedging the risk. Okay, now here it is very important. Ram buys 10,000 share. So here it is a long position. It is called long position. When he has sells, it is called short position. That's why this negative symbol is here. Okay, now 70 contracts is there. Thus, by purchasing the Nifty future contract, he can apply this. Okay, now when he purchases 70 Nifty future contract, so how he covers what will be his initial outlay, it is seen here, and it will be your close inflow at a closeout. Now, student, here sometimes students it creates in a doubt in the mind of the student. That's why here we are showing the positive figure, whereas he is buying the shares at the rate of $20. So now please see this outlay indicates plus sign, it outlay plus outlay, it means negative figure. Here outlay minus sign indicates plus figure. Okay. I hope it is clear to you. Now we shall simply calculate the value of the gain or loss. Now I am coming to question number 4b of the new scheme and fifth A or the odd scheme. Now basically this question is relating to your valuation, and valuation is on the basis of EVA, economic value added. Students, this question is very important for you. Now here in this question, basically we use the concept of asset beta. Now what exactly asset beta is this? Now student, please see, it is just like the concept of the cost of, you can say cost of capital, where we are using the value like KE into E upon E plus D. The only difference is that here you are not finding the other term, but if the debt has any beta, it will also come here. Now what happens, by this method, first of all we calculate the equity beta of a company. Okay, then we re-gear it according to the own level, because see in the question asset beta has been given. Okay, it is not the equity beta. It is very important here. Okay, normally in question equity beta is given to you, then all this exercise will not come into the picture. This whole portion is due to why? Because of this. Asset beta. Okay. Now, had this been figure given like that, equity beta, the equity word has been given here. So what would happen? You will simply write this answer. You will straightforward come to this value. Okay. So this is the moot point of this question. Here you have to calculate the asset beta. It was the moot point of the question. Okay, once you calculate this figure, then question will not be a problem for you. Now this is one of the very interesting question number 4C. Now this question can be attempted by only that student who has a very good knowledge of the chapter number 3 in the new scheme. So please remember, this question is not meant for the old scheme student. Okay, because the risk management topic is not in the old scheme. See, in this question, there is a company who is exposed to various type of a risk. Now, whereas what type of risk they are proposed to, now this has been given here. So please see student, there is no any, we can say this question is a good in the sense that not only test your basic knowledge, it also tests your practical knowledge. Now, if any student or article was doing the articleship any say in this company, in any international company, then he can present the answer in a very good manner. Now we are coming to the question number 5th A of the new scheme and 4th B of the old scheme. But please note, in the new scheme it is of 12 marks. However, in the old scheme it is of a 10 marks. So please read the question, then I will discuss with you. Now in this question, students please see, you will also see that there is some similar type of a question in your practice manual also. But please remember, in the practice manual and in this question there is a difference. In the practice manual, in the question, it has been given the dividend of XYZ Limited has been given to you. Simple figure has been given to you. But however, here the probability has also been attached to this figure. So this is the additional point in this question. Okay, there are two probabilities. One is related to your dividend. Okay, now next is related to your market quotations. Okay, so now what happens when it is giving the two quotations? So we shall use the concept of joint probability. Okay, now here we shall use the first portion, we shall calculate the average because it is related to the first year. Then we are coming to second year, that is 15-16. Now here we shall use the joint probability. This is the moot point of the question. Okay. One second, students. Okay, students, similarly, we shall calculate this joint probability. Okay, I hope the question must be clear to you. Now I am coming to the question number 5th B, that is relating to the only new scheme, because the concept of securitization is not in the old scheme. So only the simple theoretical question is there. Similarly, I am coming to the question number 5th C. Though the first, this is the topic is covered in the our old scheme also, but here there is no same question or is in the old scheme, and this question is from your startup finance. Okay, so 5th C, first part is basically the market indicators. Okay, theoretical question is there, but please remember this any numerical question can be asked, but that's why I say you should be very much clear about the theoretical aspects. Okay, now we are coming to question number 6A, that is same in the olden scheme. Now please see, this question is also new. Here it is saying XYZ Limited has imported goods to the extent of US dollar 8 million. The payment terms are as under: 1% discount if full amount is paid immediately, or 60 next is 60 days interest free credit. However, in case of a further delay up to 30 days, interest at the rate of 8% per annum will be charged for the additional days. After 60 days, MS XYZ Limited has rupees 5 lakh, 25 lakh available for the remaining. It has an offer from a bank a loan up to 90 days at the 9% per annum. The code for foreign exchange rates are as follows. Advise which one of the following option would be available. Okay, now here I think there is one student was asking, 1 minute, let me check. He was asking, say some, sir, why we have not taken the opportunity cost of cash. Let me check. One student is said like that. So there was some student was asking, sir, in the let us see solution here, what is happening? Basically, the this company has a cash available with it. So there he is saying, sir, why we are ignoring the opportunity cost? No, student, we are not ignoring the opportunity cost, because whatever payment we are making here, it is a saving us from the more payment. So it is not, we are not ignoring the opportunity cost. Okay, now the cash flow under these three options will be evaluated and the best option will be opted for. Now this question is a 6B in a old scheme, in a new scheme, and 1B in the old scheme. Now student, I will take up the query in the end. Now this question is basically relating to your commodity derivatives, commodity hedging. So basically you can say company is in a long position on 10 metric ton of the copper, means either they are owing or they are likely to we can say sell in the future. It can be anything, and intend to remain so far in the ensuing quarter. The variance of the change in its spot and future are like given respectively, coefficient has been given to you. Now here the variance has been given between spot and future, but some relationship has been given to you. So by this you can compute the hedge ratio. Okay, now hedge ratio means what will the position I have to take in a future market to hedge my risk. Now it is relating to our, say, first of all, it shall be computed in our variance like this. We shall compute the standard deviation, then we shall use it. So it means whatever the position of in a cash market, half of the same should be taken into the future market for to hedge our position. Okay, now it is size is there, so you can say that 5 contracts can be taken. Now next question comes, examine briefly the various innovative method of funding the startups. Now student, here please see, this is a question is only in the new scheme, not in the old scheme. So here various methods startup shall be discussed. So you can mention any 4 to 5 methods, to describe all the 9 methods. Any 5 or 6 method can be described. That is not an issue. Now this I am taking it right now questions. I am taking the questions that are in the old scheme and not in the new scheme. Now this question is basically relating to the real option topic. It is relating to your real option topic. Here you have to see basically a company Ramesh owns a plot of land. So now he will have to see what will be the different scenarios. Gaurav, 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 टेम्परेचर बढ़ा रखा है क्या? तो बंद कर दिया फिर उसको. तो ठंडा चला इसको बंद कर, ठीक है. Okay, now this question 1C is in the old scheme. S Limited earns 6% per share having capitalization rate of 10% and has a return of investment at a rate of 20%. According to Walter's model, what should be the price per share of 30% dividend payout? Is this optimum payout ratio as per Walter model? Okay, now in that case, see, we have to see, this is basically dividend theory question. It is not in the old scheme, not in the new scheme, so it is in the old scheme. So it is a simple formula calculation there. Now there is a question number 1D in the old scheme, though it is in the old scheme, but this is a money market instrument. But please student remember, the similar type of a question can also be covered in your new scheme also, because it is basically relating to your valuation of the short-term security that is called money market instrument. The modus operandi is somewhere is similar to your bond valuation. So here we can see that the commercial paper is issued and the duration is of 3 months. Okay, now here we can see we have calculated how we have calculated the effective interest. So it is a simple calculation is there, and even alternative method is there. Now this is a question number 2B in the old scheme. This is relating to your leasing. Okay, so here we have to make a choice. Okay, so you can see it is a very simple question and you can solve it. Now there is another question 7C, which basically relating to your difference between investment bank and commercial bank. Okay, so investment bank and commercial bank, we have to see this relating to your chapter number 8, financial services. This is not in your new scheme. So it is a theoretical question. We are coming to next types of merger. It is only question is only in the old scheme, not in new scheme. But this topic is in the new scheme as well. Then last question 7th E is a cross-border leasing. This is not in your old scheme, new scheme, but it is in your old scheme. Now I am coming. The solution is here. That's it. Now I am coming to the most important discussion of today's session. Some FAQs I am covering. Normally it is students mostly ask, sir, up to what decimal points we should round off our answer. Now student, in this regard, please remember, if any instructions has been given to you in the examination, say decimal point up to calculation, 3 decimal point, so you have to follow it religiously, otherwise you will lose the marks. Second instruction, second point, if nothing has been mentioned, then you should judge from the present value factor table or present value table market present value factor values has been given to you in the examination. Now in the examination, PV factor has been given up to you 4 decimal point. So consider the same. Okay. Now so far as the rounding of the value is concerned, say if I talk about some paisa, say I am just talking about the valuation of any security. Now the value of a security, after I say 148.4, now suppose if my value is coming like that, 148.649. So I cannot give this value. So what I will say, 148.65. So my paisa should be in the 2 decimal point only. It should not be run in the 4 points. Okay. Now say if I am talking about the bond duration question, there I have to calculate the duration. Now in this case, my advice to you, please calculate the duration up to 3 decimal point, because even the rounding of up to 2 decimal points can change your answer. Similarly, for the old scheme students, I think in their questions on the capital budgeting, they can round off the figure. Say if they are writing the figure in on the top of the, say they are saying figure in the crore or million, so they can consider it to 3 to 4 decimal point, because if they round it off the 2 decimal point, there can be answer can be differ. Then there is one other common problem, FAQs among the student, dividend paid or dividend expected. Now student, here I will mention one very important point. 1 minute. Now if in the question it is mentioned that dividend expected, so it is shall always be considered as a D1. Now if in the question is anything given dividend paid, so please note it is please consider as a D0. But simply it has been mentioned dividend, then question problem comes here. You can assume it both way, either dividend paid or D1, or D0 or D1, that is dividend expected. You can consider either of two way, you will get full marks, because simple dividend does not convey any meaning. Now there is some student ask, sir, what is the percentage of the theory portion? Now so far as the percentage of theory portion is concerned, in the old scheme it will somewhere around say 16 marks. But in the new scheme, it has a more weightage. Say it is something around 24 to 26 marks. Now I am coming to the strategy most important. Since there is only 1 month is left, so I will advise all the students, please start winding up your paper in a 3 to 4 days. Okay, make small bullet point notes in a bullet point form for revision one day before examination, and read the refer examiner's comments from the previous suggested answer thoroughly so that you can avoid the mistakes. Refer RTP's previous 3 attempts and don't pay heed to the rumor. It is very important. Please contact us. I will give your reply of your all queries. Okay, and I will share my email ID in the end. Don't worry. Okay, don't skip any topics. All topics are equally important. Now, please follow this guideline. Not it is guidelines, but it is advisory kind of a thing. One day before examination, revise what you have already done. Don't try to attempt any new question, because if you could not solve the question, then you will lose the confidence. Refer bullet points and small notes that you have prepared for the theoretical papers, theoretical portion. For numerical, please practice the question with small working. Now there is some student also ask, sir, how much working we have to give in the numerical, especially in SFM. Say please remember you have to give the an average work. You can say proper working, not adequate working. We can say not too much lengthy, not too much short, but your answer should be supported by some calculations. Stay away from the mobile phone and avoid discussion with your peers on any question, as a difference of opinion can lead to confusion. Keep your admit card, pens and other stationery items, especially calculator, for numerical paper in advance so that nothing could be missed on last minute. Take proper sleep and take proper meal before going to examination. Now it is very important. During the examination, please read the instructions thoroughly and carefully, both as well as your question paper, as well as some instructions have been given before your answer book, and these instructions have to follow very religiously. Don't make judgment about the question paper in first 15 minutes. Okay, don't say that, oh, question is paper very tough. Paper is same for all candidates. On the spot solution for the new problem. Sometimes you may face new question as you have faced in the mock test. Now it was expected from you to make a solution at the on spot basis. First attempt these questions which you know better. Okay. Don't spend too much time on a particular question, as stepwise marking will take care. Okay. Now write the question number properly on the top of the answer book, every page. Then avoid linking the question with any material. Answer the numerical question should be supported by reasonable. If time permits, please revise your working. Before handing over the answer book to the invigilator, please ensure that you have entered all correct roll number, your roll number correct, and mark the question properly. So with this, you will find you will get the good marks. Here I am sharing with you my email ID as well as my direct phone number. Now student, at this moment of time, I will advise, please don't spend your time in writing this much of long email. You can contact me over the telephone directly. So I hope this session must be having fruitful. Before I wind up the session, what I do, I will check some queries that I received. 1 minute. There is one student is asking. 1 minute, let me check. Sir, I have a doubt about writing answer. Suppose I am not confident in a particular question part A, but know that part B I can write. Part after A, all is known, is a result of reduction in marks or not valid answer. This was the problem. I faced writing the answer that I could not complete in the time. No student, I think you can attempt, but maybe I'm not so sure, but I don't think you not to attempt, but attempt in any particular order. Say first A you have to attempt before 1A, but please in this connection refer the instruction that has been issued by the examination. So far as my knowledge is concerned, I have to take a call on this same. I think it will be better if you give me a call at this number in a 1 or 2 day so that I can get it confirmed from the examination. There is student is saying, sir, in the question number 4th A, is a 5,000 sell share is a short sale? If no, then please explain why already sold share has been hedged. You can say, student, it is though it is a short sale, but he wants to take the position because tomorrow if there is a rise in the price, then you will repent, say why I have sold at a lower price. So that's why he is hedging. Okay, though he has sold the share, but he wants to hedge, say minimizing the loss. Now question say, yeah, this question was saying explain why opportunity of cash is available is not considered. See, opportunity of cash available in this question, in a question number 6, as I told you earlier, because in the first choice we are making immediately payment. When we are making immediate payment, so it means we are saved from borrowing the more money. So it is already hidden there. As per now, student is asking not a question for